Hi, this is Eric Young from Valtens & Bruner Financial Planning. I'm one of the financial planners here at the firm, and I am happy today to introduce Danielle Schamp. Danielle is our health insurance expert, and she's going to be discussing paying for health care during retirement for ages 65 and younger.
Hello, my name is Danielle Schamp. As Eric mentioned, I am an independent insurance agent. I work closely with Valtens & Bruner Financial Planning and helping their clients find health care after retirement, both pre-65 as well as post-65. Today's presentation will be focused on the pre-age 65. So for those of you retiring who are not eligible for Medicare yet and needing health insurance coverage, we'll talk about the different ways to access that coverage. All right, so there are a few ways that you can have health insurance before age 65 in the United States. One is through employer coverage, so if you are actively working, or employer coverage from a spouse who's actively working. If you are not actively working, so you retire, you're laid off, you don't have employment coverage, there is usually an avenue of getting insurance via Cobra. Cobra is usually maxed out at 18 months. There are very unusual scenarios where it could be up to 36 months for some individuals, but usually 18 months is the max for Cobra. And Cobra is basically an extension of the exact same employer coverage that you had when working. It's just that now you pay the full cost of the insurance instead of just the employee portion. You now pay the employer and employee portion. So it's usually pretty expensive. Lastly, you can buy your own policy, which is really where I step in and help you find the right individual policy for you or your family. Here is an example, and truthfully these numbers are very much an example. This is going to vary on age, location in Minnesota, tobacco use, income, all kinds of things. So this is simply just an example. Cobra also varies quite a bit depending on the employer coverage that you have and what the employer pays for insurance. Just to give you an idea, about $700 is very, I would say, average for a Cobra plan. And a lot of Cobra plans are anywhere from $2,000 to a $6,000 deductible, some being a little lower or even higher. Buying your own policy can vary as well, just depending on the level of deductible that you're comfortable with, as well as some of the other factors I mentioned earlier. One thing some of you may or may not be familiar with is MNsure. MNsure is the Minnesota State Exchange where you can go to purchase and shop for individual and family health insurance. One thing that MNsure is used for is to determine whether or not you or your family are eligible for premium tax credits. Another way of saying that is subsidies. So what MNsure does is they take into consideration any income, any taxable income. So that would be things like wages, tips, unemployment, Social Security payments, any pension income, 401k withdrawals, etc. Really, they're looking at taxable income. Down below, we did give an example here of a 62-year-old in New Brighton. If they have about a single person, $36,000 of reportable income, they could qualify for a tax credit of about $350 a month. So if you take that standard premium that someone with no tax credit of about $650 would pay, and you reduce that by $350, that tax credit, you're now looking at about $300 a month. So that's where, these premiums in this system can really be competitive with a Cobra option that may be offered to you after you're done working. Things to consider when shopping in the individual market. Network is a big one. So one of the first questions I talk to individuals about is what providers are important for you to keep in network. Some people say, I don't really have a preference. I might use this clinic now, but am not particular. That might be your situation. Some individuals say, I've always used Allina and I want to keep Allina in network. That can determine which plans are best for you because a lot of these plans have narrow networks and we need to make sure that the providers you want are in the plan that you choose. A lot of them have pretty limited coverage for out of state. Usually it's just emergency or urgent care with a lot of these plans. So if you do have dependents who go to school out of state, or maybe you have a winter home that you spend 6 months of the year in Arizona, Florida, that can be something to consider of whether you go with Cobra or an individual policy as well. I can't stress enough how important it is to work with a financial planner like Brunner Financial Planning. They do a wonderful job with their clients, making sure that if at all possible, you're pulling income from the right sources, if it's available to you, to help keep that taxable income low so that you can qualify for some tax credits on MNsure. So I certainly suggest working with your financial planner to work that out. And then, of course, working with an agent like myself to be able to not only make sure we're going through the MNsure process correctly, entering in all the right information, but also just choosing the right plan, making sure that the network is right for you, the deductible is right for you, all of those different aspects. And then one last thing I want to touch on this slide here is that there is a new executive order this year. Just a couple weeks ago it was passed. There's a new special enrollment period that is put into place starting February 16th. It runs through May 17th. This special enrollment period is done through MNsure, so it is only can be enrolled through MNsure. And what this is it's an enrollment period for people who do not currently have a MNsure policy to enroll in an individual policy. So that might be applicable if you're someone on Cobra. Maybe you're on Cobra and paying $800 a month, and you're questioning, maybe it would be cheaper if I'm eligible for some tax credits and can keep my income lower this year to bring that premium down a lot via MNsure. So if that's something you're wondering about, certainly feel free to reach out and we can investigate that as an option to see if we can save you some money. And lastly here, I'm going to hand this over to Eric to wrap up. We're just going to touch on some long-term care costs as well as some financial considerations to make. But I want to thank you for listening today and being a part of this presentation. As always, if you have any questions or you'd like me to assist you in making some of these decisions, I would be happy to work as your agent and be able to not only help you with the enrollment process, but through the entire health insurance lifetime. Making changes every year during open enrollment. I'd be happy to help you with all of that. So feel free to reach out to Brunner Financial Planning. They can share my information with you. Otherwise, I can certainly be reached directly as well. So thank you for listening and have a great day.
Thank you, Danielle, for going over all of that health insurance information. On this slide, I was going to be talking about long-term care costs. That's something when we're doing a retirement analysis, we always take into account how you are going to be paying or how the client's going to be paying for long-term care in the future. There's really three different options that we discuss with clients depending on their situation. One option is to self-insure, use your own dollars to be able to pay for your long-term care costs in the future. And then there's also long-term care insurance, which we also have the ability to run the numbers to see if that might be an option for you as well. And then there's also these life insurance policies with long-term care riders where for some clients that might be an option also. Financial planning considerations. When we talk to clients about their health insurance costs, we want to make sure they're factoring that into their retirement planning, because a lot of times the client is used to having maybe their employer pay for some of the costs, and when the client has to then pay for the whole cost of health insurance, we just want to make sure that's factored in with their cash flow and budgeting for retirement. That's something we definitely help with. There's also a tool called a health savings account. This is an account that is for medical expenses, to pay for medical expenses, and it can be tax deductible. It grows tax free, and also you withdraw it tax free as well. And in a lot of those health savings accounts, they have investment options where you don't have to pay tax on the gain if your investments do go up. We do talk about diversifying the taxation of investments, and what I mean by that is, should you put money in a Roth or an after-tax account in addition to your pre-tax dollars that you're saving, whether it be through a 401k, 403b, or an IRA. Every client is a little bit different depending on their income level and what tax bracket they're in, and we can help determine if it makes the most sense to put all your money in pre-tax dollars or to split it up between pre and after-tax dollars. And the last thing, we always recommend that you work with somebody like Danielle to make sure that you're shopping the best insurance options that are out there and having the conversation on what is the best insurance plan for you. It's everybody is in is a little bit different when it comes to their needs and what health insurance might be best for them. It's not always what your friend or family member might have. It's all dependent upon you. So wanted to just thank you again for your time, and wanted to thank Danielle and Champ Insurance again. And if you want to get in contact to go over anything that you've heard in this video, here is our phone number, 651-628-9832. You can contact any of the financial planners, tax department, or Danielle for health insurance questions at that number. Thank you.